Hello, everybody. Welcome to today's live stream. Um, yeah, bamboozled. Hello, Aaron Fried. Is it Aaron Fried or Aaron Fried? Because I know in German you're supposed to pronounce the second letter of the vowel, second vowel. Like in the band Icebreaker, you pronounce the I since it's EIS. 90% sure Ramstein breaks the rule. Oh wait, no, Ramstein EI. Yeah, we're good. Okay. I also know that they speak in like a deep country dialect that's awful. So probably not the best reference. All right, welcome to today's live stream. I'm doing good. Thank you for asking. So Bitcoin is at its local low for probably the entire range. A lot of people drawing a triangle right now. If you want to scoop that in there, I won't argue. Look at a triangle. Let's get those lines accurate, shall we? Oh my goodness. Look at those wicks. Yeah. What do you think, guys? You think we're going to touch down on the triangle? Who knows? Still not compressed. We take a look at this right here. Not compressed. Right? Still not enough potential energy to really start a new trend. And I just want to draw a comparison here as far as what compression should look like. Yeah, scooch on in here. Take a look at this wave PM. We're like right about here. We're like maybe a week or two out for where we have this compressionary range with the lower lows, the higher lows, and the lower highs. We get everything below that 0.7 value. Then we look for the breakout in either direction. So that's what we're waiting for. We have this nice compression coming on down. We're getting close. But right now, it's just too noisy to make predictions in macro level direction. What do we have on the lower time frames, though? That's the important question. Boy, what are you doing? You're crazy. My dog's crazy. Are you crazy? Come here. Yeah. Hi. Cutie pie. Please put the questions you have in the chat. I'll be happy to look at them. Nice. We got 6 online. That's pretty quick. You guys are popping in fast. Look what happens when I stream at a reasonable hour on time. Like, I'm trying to get back in the habit of streaming regularly. My life kind of got turned upside down for like a solid 3 months. And then I was just chilling the other day and like, wow, nothing's happening today. This is great. Let's make some good habits. So here we are, live streaming. I used to stream every day for like an hour. It's ridiculous. Did it for an entire month. Okay, 4-hour chart on Bitcoin, also not compressed, also kind of just noisy sideways. Wow. How about the 1 hour? What do we got down here? I have a phone call. I'm gonna look at my phone. Be right back. Yeah, I don't remember what that is. Hello, sir. Do you ever look at DXY? Yeah, that is probably relevant to the title I made today. Okay. That's Certainly a parabola. Let's look at the weekly. Nifty 50 weekly. Yeah. Let's take a look at those Indian charts, shall we? Okay. That's to be 30 seconds. One moment, please. Okay. Okay. So, the question is, how is the strength of the dollar performing against most other currencies? This is quite the upswing we had recently. And I think what's rather interesting to take a look at is even though this is technically derivative information, mean reversion conditions are incredibly clean. This is following all the rules I would expect on typical volatility theory, right? We have our support off of our blocks. We have our resistance on the 3.2 of the CLCP. We have very clean and concise mean inversions. Again, we have the clean pivot when the pivot's broken. We see the swing low, CCI roll to the upside. We see the mean inversion, and since then we've had a nice parabola. We should be able to generate a nice period of mass off of this recent move. I think the 8 hour is going to show us what we want. I thought of a really good analogy for defining time periods with the locks. 3-wave PM. So you know how I always said that you want to manipulate time frame to make the 3-wave PM look good, right? And kind of just think the question like, well, why are you manipulating your indicator to match the chart, right? So think about this. You have an engine in a car, and depending on your intent, the gears you change through affect the performance of your intent, right? If my intent is to, say, accelerate from a zero position, I want a very low gear, right? I want a very clean and nice gradient to accelerate the car efficiently. If I have the car in the highest gear and I'm trying to accelerate the car, these readings all the way down here are going to be impossible to read. But if I change the time frame to 4 hour, those readings become very clear and very easy to read, very easy to manipulate. So matching the gear to match the intent, right? I am aligning the chart's conditions to the optimal operating conditions of the indicators. So fun little rant. I think what's important to note is the 3.2 standard deviation of our locks, which is currently defined at 105. If we happen just to tag that briefly, that would be a very good scalp opportunity. However, this is a true parabola, so be careful if you are playing with futures on this, for example. Yeah, but incredibly strong, very parabolic. I do think this needs to cool down briefly. Yeah, so if we happen to tag 104, 105 within the next few days, you can try a very brief short because we are extremely overextended, as defined by our current mass readings. Okay. Okay. So, Kat and I, more specifically Kat, because he is the fundamental analysis genius, we have, or rather, Kat has gained the stronger opinion that retail sentiment has cooled off. There is no longer the fervor we had over the last few years. The markets have not been great for the things retail chases the past few months. Some ominous signs that it's generally cooled off, and there's been a significant drop-off in single stock call options back to where it was in the early pandemic. So the euphoria we've had has ended, essentially. Even I, browsing some Reddit threads, I think one of the most telling Reddit threads is I saw someone not specifically saying their sentiment, but the title was, "I can't believe I bought the top." The general sentiment is like, oh yes, this is a great time to invest. I buy now, 5 years from now, I'm going to see good returns. That is always going to be true. If you bought in 2008 the exact top of the market, in 5 years, you would have turned a significant profit, and you would have actually outperformed annuities, which are designed to mitigate drawdown. They're supposed to be the safe investment. But to compare, buying the exact top in 2008 and just holding for 5 years, you would have outperformed the asset class that is supposed to be safe. It's very silly. So if equities break down this floor they initially made a couple months ago, things are going to start getting interesting really fast. And let's take a look at our NASDAQ composite. Goodness gracious. Yeah. So here at the beginning of the pandemic, we saw a rather drastic drawdown. Let's turn off the magnet. It's kind of getting annoying. Just, there you go. Yeah, 32%. This is significantly less volatile, but we're almost reaching that same percent drawdown. And what's notable is we're actually seeing and completing this macro level mean reversion. So some buy levels I would be interested as a target is this LOXP down here based on that 200 period Bollinger Band, which I just feel like manually defining as 200. Oh, that's incredibly clean. You'll even notice that for this mean reversion condition, after our initial entry, we ran back up and tested that containment zone value. And what's really nice is the 200 period is also a very consistent institutional benchmark for these macro level timeframes on the 1.25 standard deviation. And the fact that we did see strong rejection in there in conjunction with our longest over expanded period is a very good confirmation signal for this downward move here. And we're going to have that target of that 200 moving average on the 4-day here. So about 114, probably another 10% drawdown for 35% total. This might get a little hairy in the next coming weeks. Wouldn't be surprised for a brief kickback to the upside here. If we take a look at the 4-hour. Yeah, we see some vague exhaustion here. Generally yellow across the board. Everything above 0.7, which is a good sign for low potential energy So I do think we'll have a slight kickback here to cool off before our next downward head. I encourage you all to get your questions in at this time. In the meantime, I'm going to eat an Oreo. I bought a pack of Oreo for the first time in like 3 years. Treat yourself. Oh my God. That's pure dopamine. Yeah, so the biggest source of paper wealth increase for Americans in the pandemic was home prices. We've seen significant drop. Given half the country has a lot of wealth tied up in their homes, and much less than that has a lot of wealth tied up in the markets. So mortgage rates are ballooning incredibly fast. I remember listening to one of the streamers I watch. Someone was asking about home prices, and it was probably mid 2021. And he says, yes, home prices might be at a record high, but the cost of buying a house, like the actual act of the fees and the mortgages, is at a record low. So even though the base price is high, the actual cost to buy it was low. The cool down that's happening is house prices are still high, but the cost of buying them is increasing significantly, which implies that there's going to be a cool down in the house buying market now that you no longer have the favorable condition that was making these ridiculous prices mildly appetizing or at least tolerable. So things are going to get hairy. Our home prices keep going up, even with gas at 300%. Yeah, man. I predict that the housing market's going to cool off in the next 6 months for sure. Nifty 50. I will take a look at that first. Oh my God. It's Oreo. I've never felt so good in my life. Holy shit. That's so delicious. And this is not right. Is there a specific one you want? I don't remember. Is it this one that's just nifty? I think it is. Being a little dumb, not understanding TF, those indicators. Yeah, so I actually made this pretty easy. There is a FAQ right here underneath me. Just click that. It is a minute and 30-second read. It explains what everything on this is. It's just Bollinger Bands. So essentially, these are Bollinger Bands defined by this indicator here, and this indicator here is a heat map of this indicator here. So CCI 1.25 standard deviation is the 100 value each side. That's the empirical constant for if a bell curve gets wider or smaller. If you're inside a bell curve or a distribution, it's going to contract. If you're outside, your bell curve is going to get wider. And what we can define is relativistically how wide a bell curve is exhausted, or if it has potential energy, based on a period look back for how wide the bell curve has grown or shrunk. What we do is we define that information into a heat map. Compression, or blue, is potential energy. Red is exhaustion. And by looking at periods of potential energy and exhaustion, we can say things like, oh, for up to the period of 80, we have the area to have volatility. But above that, it would require an unrealistic amount of force or volume to see volume in the perspective of, say, the 200 period. And I'll show you what that looks like. So we load up an 80 period Bollinger Band, right? right? We can see volatility in perspective of this 80 period, right? That's reasonable and logical. However, seeing volatility in the scope of our 200 period is unreasonable. So long as we stay outside this standard deviation here, which is the longest overexpanded period, we can see volatility in the 80 range and see trend as defined by the 200. Right, so very nice, cool pivots. And what we do is we actually define these values manually with ACAT. With this swing high being generated for us automatically. And this LOX is timing out because there is a reading over here, but I, again, define it manually as 200, which we can see here. So essentially, swing high is going to be around 18,000. Our swing low is the 1.25 standard deviation of this 200 period, which is currently 16,400. So essentially, we're going to see a nice little compression here. Either we're going to break up above and see trend continuation, or we're going to break down and see mean reversion to this 200 moving average. Okay, very clean, very easy to understand chart. Does that help things? R4 is 87. And hopefully answers your question, Crypto Pro Signal. Yeah, good stuff. Yeah, that is delicious. Whew. Thanks, man, for explaining. My pleasure. All right, let's take a look at Litecoin. Litecoin has been dead ever since the creator of Litecoin says, hey, the price is too high. And then since then, it's done nothing but go down. I was like 2018. Yep. Remember that. Just Litecoin dead for now. Not until something big and fundamental happens. Like it happened right here. Like the price is too high. Since then, it has done nothing but decrease in value, which is kind of what I'm going to continue to expect, to be honest. Not until we see a breakout to the upside, and then at which point we can define a longest overexpanded period to define trend off of. But until then, this is down, and I don't see any hope for it. Yeah, isn't it funny how high gas prices are when, like a year ago, you had negative prices in the futures market? Because the future contracts that were negative were physical fulfillment, where someone would have to go and pick up the oil in person. And it would have cost more than the oil was worth at the time to go and pick it up. So that's why it was negative. But very interesting stuff. All right. I'll take a look through any questions over here. Live stream questions. No. There's not. All right. What do you think of Link? Entire year of price action wiped out. Holy. Wow. Quite the move. Yeah, what is that drawdown? 58%. That's impressive. Okay. One thing to immediately note is everything is above 0.9 here, which does imply extreme exhaustion. So it's going to take a lot of effort to push price further down than we currently are. We're going to generate our locks with the ACAP. Yeah. Currently trending directly on this 3.2 standard deviation. If you want to try a super risky play based on a single factor, which is this is completely overexpanded, you can try that. It's going to be a scalp just to around like 3,000. 4%. It's reasonable. It's going to be 1-to-1 profit ratio, though, because you want to account for volatility. Yeah, daily chart. Ooh. Actually, you know what? Because we're also directly on the 3.2 of the CLCP, this is actually looking like a very good buy right here. It's very interesting. Yeah, I would try to play this. This is interesting. We should bounce off that 3.2 standard deviation. You got a confluence in the lower time frames. This is a good chart. Yeah, I like it. I think Monero has a future. Yeah. Wow. That's some volatile price action. Only thing I'm seeing here is you have a potential bounce play off of 4650. So if we actually happen to do tag down on that value, you have sloping blocks to catch the train off of. So 1.25 standard deviation of 210 period. All right, everyone. That's going to be it for today. Been a pleasure. I will try to see you on Wednesday at 2:30 p.m. MST. All right. You all have a good one.